Intel stock is down nearly 8% after reporting a huge loss in its manufacturing business. In today's episode, I want to look at the following. First, I want to take a closer look at Intel's new segment breakdown. Second, I want to take a closer look at financial update and the real reason the stock is down. And third, other updates impacting the overall stock. So let's take a closer look in today's episode.
I want to thank the Motley Fool for sponsoring this video and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
All right, so like I mentioned at the beginning, Intel reported that they are having a new financial reporting structure, and that's going to be starting here in the first quarter of 2024, where Intel will shift to this new financial structure to align with their new models. And you might be wondering, Jose, what is Intel's new model? Well, if you've been following this company is pretty much two businesses at once. It's Intel Foundry, which is somewhat comparable to TSMC, even though it's a very, very small portion of this company's revenue right now. Actually, that might change as with the new reporting business. The second is Intel's products, and Intel products is more closer resemble to AMD, or a semiconductor company that doesn't do semiconductor manufacturing. So Intel has always run as these two businesses, but now when we're going to take a closer look at things like their income statement and all their financial statements, they're going to be broken down into those two main markets. And I personally believe that's a great move for them and for semiconductor investors, because now we'll be able to compare their foundry business to TSMC and their product business to like those fabless semiconductor companies that I mentioned. Because if we take a closer look to the image to the left, previously all those costs were kind of put together or lumped together and distributed amongst their products. And that did not allow us investors to understand, hey, how is your margins related to AMD? Because the way the expenses would go all together, the actual margins will shift. And I'll explain a little bit in the upcoming slide. But now with this new operating model, Intel Foundry within itself is going to report its own profits and losses. And here you're going to include kind of the foundry services, which is going to be their revenue, and any form of expenses that deal with foundry manufacturing and supply chain and the overall technology development. And they're going to sell their foundry services to their Intel products at market price. And here, Intel products is going to report their profits and losses on things like their client computing, on their data center AI, and their network and edge solution. And here is a perfect example of how things are going to shift in the overall numbers. So before this change, if you were looking at Intel products, you will see for 2023, their operating margins were roughly 10%. Now, 10% is very, very low if you're looking at a competitor like AMD. But now, if you go after this new segment, which is more aligned with its peers, you can see that the operating margin is actually 24%. Before we go any further, I just want to say thank you all for the amazing support we are getting in this channel. We're closing into 40,000 subs. That is insane. So if you haven't and you are enjoying the content, make sure to hit the thumbs up and the subscribe button. Finally, if you want to support this channel a little bit more, check out my special offer at fool.com/Jose. Now back to today's episode. Now, Intel Foundry, like we said, is going to report its own separate operating segment with its own profits and losses. And Intel Foundry will recognize revenue from external customers and Intel products at market-based pricing. And this is what's going to, right now, if we take a closer look at Intel's Foundry services, it's very, very small. But that's because it did not include the revenue coming from its internal solutions. Now with this new segment, we're going to see that the Intel Foundry service is actually pretty big, especially if they're charging everything at market price. So within this structure, they're breaking it down into three main big segments. The first segment is going to be the foundry business, which we just discussed. The second segment is going to be called Intel Products, and Intel Products is going to include their client computing group, which is the CPUs for desktops and laptops. It's going to include their data center and AI, which is their server GPUs and their server CPUs, and it's going to include their network and edge solutions. And the third is going to be all others. Within all others, you're going to have Altera, which is an Intel company now, And this was formerly Intel's Programmable Solution Group. The second one is going to be Mobile Eye, and the third is going to be any other solutions that the company is growing. Now that we understood what happened and why it happened, let's take a closer look at some of the financial numbers Intel shared with us. First is Intel believes that their operating losses in the foundry business are expected to peak in 2024. So this might have some investors worried because 2023 was already a crazy loss of $7 billion. Now, Intel Foundry is also expected to achieve break even midway between now and 2030. So that's somewhere between 2026 and 2027. But the wording has changed a bit. So Intel has always pushed for a break in around that time frame, but they never said between now and 2030. So now this is what I would say is maybe creating some uncertainty in the overall stock where investors are like, hey, it seems like you might be giving yourself a little bit extra leeway of when we should expect this break even process. And that's the main reason, in my opinion, that the stock is down because it seems like Intel's Foundry segment is now a little bit wobbly compared to maybe where it was a few months ago. The other thing that we are seeing is right now the significant upfront manufacturing investments is starting to stabilize. Intel has already made a huge amount of investments in forms of equipment, in forms of building their overall fabs. So that's why they believe 2024 is going to be the peak of those operating losses, and they should start to kind of decrease from there on out. Now, here we can kind of take a closer look at the operating segment. And this is where Intel, I think the news headlines are going crazy because if we look at the Foundry business actually made $18.9 billion in revenue in 2023. That's because obviously most of its customer was Intel. But if we take a closer look, operating numbers were a loss of $7 billion. So I personally wouldn't understand why the stock price dropped here. It's not like they're coming out and saying that these are new losses. These losses previously were just shown in different segments, right? It's not like they made up new losses. It's not like Intel said, hey, look, we're now $7 billion short. That's not the case. This $7 billion loss was always there. It was just hidden amongst the other. It was just hitting on their previous, if we take a closer look, it was hidden amongst this allocated cost. But now with this operating model, they're going to be able to really break it down for you. So it's not like they lost this new $7 billion is new to them. It's just been allocated. It was just kind of distributed differently. So this is why, if this is the main reason the stock is down, I think it's pretty foolish in my opinion, because it's not like the company lost more money. It's just that it was not hidden. I don't think they were trying to hide things, but it just they didn't have the way to show it to investors previously. Now, some great news for them in forms of capital allocation. Intel is receiving a lot of incentives from things like the United States CHIPS Act, the European CHIPS Act, prepaid commitments from customers for their 18A, and financial partners like Brookfield, where they have over $50 billion of capital available to them one way or another via loans, via incentives, and the list goes on and on. Now, one of the ways Intel is really trying to push into the foundry profitability is by first, a lot of their wafers that they're using right now, it seems like 70% comes from their internal use and the other comes from external foundries like TSMC. So one way to kind of improve that profitability journey is to become less dependent in external foundries. And the way they're going to do that is by continuing to improve their overall technology. All right, now that we saw what was happening, we took a closer look at some of the financial numbers. I want to also share just some overall updates of Intel and their foundry business. Here is Intel's timeline and roadmap for their upcoming products. We can see Intel 18A, Intel 14A, Intel 3E, 3PT, Intel 12 as well. So Intel has a huge roadmap ahead that will drive more revenue to their segments. So here we're going to take a closer look at their roadmap and how they compare themselves to competitors. The main competitor here is going to be TSMC. We can see Intel 7, pretty weak. Intel 3 is weak, but not as bad. Intel 18A is where they believe they're going to be somewhat in a nice competition to their overall peers. And Intel 14A is where they believe they will take a nice amount of leadership in the overall technology. One thing I did not see here, which I thought was pretty weird, is Intel 20A, which is supposed to be between Intel 3 and Intel 18A. But it seems like they don't really want to talk about that. That's a little bit weird there. But we can see how Intel is really trying to push back into leadership for the overall foundry segment, which will obviously help their technology products as well. Some other important updates here is Intel did announce a new financial officer or CFO for their foundry business, and this is going to be Lorenzo Flores, which is coming from multiple years. Previously, he was the CFO of Xilinx, which was a company that was previously acquired by AMD. So I believe that's a great move and a great acquisition there. And overall, that's all I have for Intel right now. So Intel, like I mentioned, took a huge hit today, where the stock was down roughly 8%. If you take a closer look at the headlines, most people are saying that the big reason for the drop is because the company posted $7 billion of operating loss in 2023 in their foundry business. But again, like I mentioned, this is just the way they changed the numbers up. It's not like this loss is new. It was just being shown in a different way. So it's not like the company saw a bigger loss than expected. It's just Intel was finally able to show the numbers. And when a price action like this happens, in my opinion, where there's nothing really that changed about their numbers, right? At the end of the numbers, their net income was still the same. Their cash flow from operations was still the same. Just the way they reported, they added a new line, and that overall destroyed the stock 8%. I think there's too much fear in this market right now, and Intel is going to be one that I'm going to be keeping a closer eye on. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you next time.